As we see businesses draw up post-pandemic plans, CFOs find themselves at the center of the action. After all, a new age CFO should know how to find the best M&A targets at the right price, embrace business model innovation, accelerate automation, create a risk-intelligent culture, and finally be able to unlock hidden value of audits to ensure growth in the business. At the end of the day, the CFO is expected to leverage the best mix of tools, technologies, and solutions to accurately measure the potential success of business decisions, which would in turn reinforce their position as strategic advisors and decision makers in the enterprise. What CFOs really need to boost their chances of success is an integrated cloud suite that offers all these services. And since the cloud is no longer just a cost optimization route, but a competitive advantage enabler for companies, in our discussion today, we will explore how can CFOs gain the agile advantage in the post-pandemic era with industry leaders. I'm your host, Gautam Srinivasan, and joining me on the panel are Vikash Kumar Jain, CFO at Hexaware Technologies, Narayan Barasia, CFO at SBFC Finance Private Limited, Yashpal Jain, CFO at Sandhar Technologies Limited, Rohit Nair, CFO Care India, Prashant Chaubey, Director Solutions Engineering India at Oracle. So quite an extensive lineup of leaders that we have with us for a wide-ranging discussion. So thank you everyone at the outset for joining us on this talk. Let's start by understanding more about agility in business in the context of evolving roles within the leadership. Vikash, I'll start with you. Over the last 18 months, how do you think the CFO's role has changed, and how can a CFO continue to innovate in the face of a pandemic-induced uncertainty? Because as we see, as digital transformation picks up steams, more and more functions are added into the CFO's bouquet.
If I think about what has pandemic done, it's changed the role of CFO quite dramatically. The usual expectation of business partnership, risk, and compliance continues. But what is a CFO expected to do over and above that is much deeper focus on driving transformation. And this transformation is not only from a finance perspective, but is in terms of how you drive the transformation on the business side of the house. And the CFOs are required to play a much broader leadership and change agent responsibilities. So the first is drive transformation. Second is technology adoption. And why is technology adoption the most important aspect? There was a time where there was a constant dilemma as to whether you want to make a decision which is going to be fast and furious with limited data availability, or you are going to go the old school of way in terms of doing slow and steady with all the required information. Now, what you realize is you need to be fast with the decision making on a real-time basis, but have all the data, because the chances or the opportunities of going wrong are very, very limited. You can't do that. You're going to miss the bus. What that basically means is if you have to do that, you need to invest in the right technology landscape so that you have the real-time predictive insights. Third thing is be prepared for corporate events. If you look at the corporate events like IPOs, mergers and acquisitions, divestitures, reorganizations, these used to be the events which the CFOs used to experience maybe once in their professional career. A lot of them never used to experience it, but it's become quite common now. I mean, look at the number of IPOs the country has seen over the last 18 months. Who would say that it's a pandemic situation right now? What that means is now that the CFOs have to organize their teams so that events like this are actually more a business as usual than one-offs. Again, technology comes to foreplay because everything that you do on these events is basically driven by the financial numbers. Last but not the least, drive simplification. If you have multiple systems, you are just doing reconciliations and spending tons of company resources in terms of data points, which are backward looking and are not helping in terms of predictive insights. So drive simplification to the extent it is possible. And the only way to do all of this, which is drive transformation, higher technology adoption, be prepared for non-BAU corporate events, and simplification, is to accept the pace of change and make technology your friend. and be growth oriented. You have to ensure that technology is your friend. And within the corporate scheme of things, I say that the best buddy that a CFO has right now is the CIO. They're not at loggerheads, but they're working towards the common objective and the common goal.
All right, never too fast or too furious when technology is on your side, especially as massive changes come about for the enterprise. And of course, the interaction which define that relationship between the enterprise and the customer. Fair point, Vikas. Let's also talk about agility from the lens of how conversations around it might have shifted before and after the pandemic. Narayan, how important is business agility in the current environment? What are the innovations that you are deploying in your business to be more agile?
Agility is so common, and look at agility from different point of view. First is the competition. Who is the competition? Most of the time the competition is not from within; it's actually from outside. So let's talk a little bit here. So look at when the private sector bank came in place. The public sector bank was operating in a particular way. There was a certain element of agility. There was a certain way in which customer services used to be delivered. The customers used to come to a bank's branch to get everything delivered. When the private sector came in place, that's where the ATM started. That's where a concept started that why a customer has to go to a bank, right? Even today, if you look at from where the competition is coming, is from none of these banks. It is actually coming from companies like Paytms. It is coming from people like Paisa Bazaar and things like that, who are not a bank, who are not NBFCs, right? So most of the time, the competition is actually from outside and not from within. So the concept of agility is that are you able to do things which is going to happen in future as an organization, be it tech, be it customer service, be it product solutions, be it any kind of offerings you can make to a customer. If as an organization we are not able to do it, somebody else is going to do it, right? The other point here is that the life of an organization is getting shortened. Earlier, maybe 25 years back, we used to see that, once an organization there is always going to be there. In today's time, the life is very, very short. If a company is not agile in terms of product offerings and solution, it is a matter of time. The company is not going to be there over the period of time. So this is one. The second point is from the risk management point of view, there is a huge volatility, economic events, macroeconomic events, global perspectives. India gets impacted because what China does somewhere or US does somewhere, right? The risks come from different sources, and agility is also about making sure that as an organization you have developed and invested in tools and practices and culture which you are able to take care of any kind of risks which come to you, right? The third, I think, in my mind, is the regulatory change. As a NBFC, we get RBI regulation at least once in a month, right? So there's so much of regulatory change. In 12 months we'll find 12 amendments happening to different regulations, right? So it is so important that as an organization, are you ready to adapt to the regulatory changes happening around you? So to us, agility is all about business or risk or regulatory changes.
Absolutely. And there are revolutions all around, right? And when we see the payments revolution, digital revolution, the fintech revolution, and the banking revolution, you understand that you're not just competing with the outside marketplace, but you're also competing internally to make sure that you are resilient and you can face up to that competition. Point taken, Narayan. Let's also see that, companies are now set to recapture growth post the pandemic. There's a big rush coming in. With that in mind, Prashant, what are the big moves that organizations need to make to pivot towards growth and success? We heard Narayan talk about how organizations are looking at competing internally to make sure that everything is optimized so that they can compete effectively with outside competitors. In your idea, what's the big move that organizations need to make?
So, Gautam, I think there are some basic tenets of business whose importance has grown further in the current environment, looking at the pandemic. Right? So, in order to grow and succeed, organizations will have to look at customer acquisition, they have to look at customer retention, they look at operational efficiency improvement, and of course, the capital deployment efficiency that they have. So, in light of these things, I think the first big move that CFOs are making is a shift in their business models. We see more and more companies getting innovative in terms of how do they go to market, right? Everyone is moving their business online, but that is just the start, in my opinion. The real big move will be servitization, where you can offer anything as a service in a subscription model. And that also provides you with a stable and a recurring revenue stream. So you'll see real estate companies are now offering co-working spaces that charge by the hour. You have car companies which are now getting into subscription. You have Philips which is offering lighting as a service, where you pay by lux or by the light intensity that you are consuming. And this also requires a lot of technology investment to make sure that your backend can handle the usage monitoring, the recurring billing, the offers, the customer balances, and so on. So that is one big move. The second big move is the investment that companies are making in automation. So a lot of companies are realizing that they're better off handing over mundane and repetitive tasks over to technology. While this brings in operational efficiency, it will also minimize the disruption to your business in an event like the pandemic. Everything from invoice processing, account reconciliation to book closures is getting automated. It's very common to see chatbots on every other site that you visit. They're trying to assist you with your queries. And CFOs are also relying on cloud, as it plays a very important role in providing some of these AI ML enabled capabilities, which require some heavy duty computing power on a real-time basis. Next, I think there's a proliferation of data that we see all around us, right? So the same moves that enable an organization to grow and transform can also put a company's most critical and sensitive data at risk. Forward-looking organizations are also heavily looking at creating a risk intelligent culture. What it means is that they're empowering their business process owners in risk identification, risk prevention, and strengthening risk-based decisions and executive oversight. So I think Narayan was also talking about risk in a way in terms of the business, but there's one core area where people are investing a lot of time and energy on. If I can quote an example, Skechers, I think all of you must be familiar, the sporting goods company, right? It's one organization that has been very successful in transforming their internal audit and compliance in the cloud. So using Oracle Risk Management, they are able to audit a $4.5 billion company with a lean 6% team. Can you believe it?
Absolutely.
So I think if I just recap, the three big moves that I see people making are a shift in their business model to a subscription model, investment in automation, and finally focus on managing the risk that their organization is exposed to.
Well, they don't call it Brave New World for nothing. And I'm looking forward to hearing more of these use cases coming about, especially when we look at, how you can optimize internally to deliver more value for the enterprise. Yashpal, let me bring you in this context to expand on what Prashant has mentioned, following a period of unprecedented disruption. How would you assess the current state of the tech landscape, and how do you think it is impacting finance as a vertical within a manufacturing setup?
Very well said, Gautam. I agree with what Narayan has said, because this entire episode of pandemic, it has shifted the paradigm, how the organizations they were working in past and going forward, how they plan to work out. So earlier, if I have to classify technological advancement within the manufacturing setup, because largely I am coming from the manufacturing setup. So earlier there was a push to go for integration of activities to work on a tech landscape, but the speed used to be slow. But this pandemic has teached us that nothing is, impossible. And with a larger focus on the technological setup, even the disruption can be minimized. I do agree with that. In my case, if you remember, I would say I am working on a cloud. I am working on Oracle Fusion. Although there was a disruption by the pandemic, but still we were managed to smoothly run our operation, fulfill the demands of the customer. Second, the larger change that has taken place is from the inorganic growth side. So one is my operations. Operations, if I would classify like my ongoing operation without disruption. Second comes the focus is my regulatory and the compliance part, which in any case, technology has boosted it. I'm able to manage anywhere my location because I have the operational plants overseas also, India also. We are roughly operating 42 manufacturing locations. If you can imagine, going manually, consolidating each and every, taking a decision was an impossible task, especially in the global pandemic situation. But with the help of technology, we have been able to mitigate all the risks associated with that. Secondly, the entire pandemic has opened up a new Pandora of challenges and opportunities also. Opportunity, if I say, I find is a good time to go for an inorganic expansion in the market. With the ability of the data, with the automation that we have done, we are able to reduce our time on the operational efforts, on the time to extract the data, to analyze the data. On the contrary, the real-time information is available with us. We are using minimum times and to go into deeper analysis of data, how we are placed within the industry, how the industry is moving, how we are moving within the industry, what are the challenges that we are having going forward. And as one of my co-panelists has, told that we are shifting the business models also. A larger organization setup is taking place. So coming back to the question of inorganic opportunities, we could find in the market that we are getting a cheap valuations, a good valuations to go for an inorganic growth. But that is again a possible if we do have a confirmed study how the industry is moving and how we are moving and how the target entity was moving. So in short, if I say, I would call it as an era of opportunity, era of advancement, an era of, I would say, a shift in the paradigm in the mindset of the organizations, how they were working, whether it's a MNC or a promoter-driven company or a mid-sized company. All have shifted to a larger advanced technological advancement era. And someone moving at a slow pace, others now are moving at a very faster pace because no one knows what happens next year. Maybe a third wave, maybe a fourth wave, or any other disease can come up, any other challenge may come up. So this is how, and I would say like it has really helped us. We have optimized the resources, we have pooled up the resources. We were able to know, even we are able to cut down our costs and increase our operating margins also. So right. I would call it as a more of an opportunity, less as a challenge.
Well, as they say, where there is adversity, there is opportunity, but it's that shift in mindset which has come about, which has enabled so much of the change we have seen in the landscape. At this point, let me bring you in, Rohit. You've been engaged in multiple digital transformation initiatives. Could you throw some light on how a robust ERP solution helps in making businesses future ready? And what are the key impacts that you see in a, say, before versus after scenario?
Yeah, thanks, Gautam, for having me here. Yeah, so I strongly believe that information is the oil and analytics is its combustion engine. So in today's ultra VUCA world, there is a need to migrate from a rule book approach to a playbook approach, which basically means combining situational awareness with flexibility. So it's no longer about leading by direction, but by orchestration. So I think it's imperative here for the CFOs to transition from being descriptive and diagnostic, which basically meant what happened and why happened, to predictive and prescriptive, looking at what will happen and what am I going to do, which basically means creating scenarios and modeling. And that is where I think a technology solution like ERP is a big boost, because today I see the role of CFO as also a chief facilitation officer. And the CFOs are the stewards of the new technology and process adoption to really unlock the efficiencies and enhance the agility in the business. So in today's world, as we say, data is everywhere. There is no dearth of data, but the challenge is how do we take out meaningful information? So by automating our processes, by implementing ERP across the various functions, the focus is more on analytics and on predictive modeling. And this also has hugely increased our capability and I would say staff motivation, because one of the key elements whenever such transformation happens is a fear in people's mind that, hey, what will happen when technology comes in? So I think we as a company have been able to really give that vision and that comfort to our team, that it's not about replacement, but it's about enhancing the scope of the job. So now my team is more engaged in analysis, in really supporting the businesses in their future projections, execution, instead of just coming up with data crunching, data mining, and basically focusing on what has already happened in the past. So in that way, I would say this is a big boon for today's business, where we really have to be very, very conscious, and CFO really need to act as a catalyst for leading and driving change.
Absolutely. The chief enabling officer could also be a term that you look at for the CFOs of tomorrow. And it's a broader trend also emerging, where companies are looking at data in the context of value. As in, what does it enable in terms of outcomes? And that's bringing up more and more opportunities, whether it comes to revenue or cost optimization. Dialing back the conversation to agility, Narayan, as a new age financial services institution, has SBFC found it easier to implement agile business practices? What are the advantages of being a new player, and what could be some of the disadvantages?
So, it is very surprising, but the fact is the the agility and innovation actually is done by people who are new. They have lot to do and lot to achieve, and so it's easy for them to get into something which is very different and very very new, because it has to create some room. A company which already have a very large market share generally start resting on the laurels of the past, and then agility then gets compromised. So agility comes from the need, actually, whether there's an organization we feel that there's a kind of need. So I'll give you a couple of examples there. Our raw material is money. Money is a raw material, and in a lending business, we are on a constant place to raise capital. And last couple of years has not been so good, particularly post demon, and then there was some lot of debacles in the market, ILFS, and then DHFL all the way, and then COVID happened. So the market was not so good from a liquidity point of view. So there are opportunities of windows of opportunity to raise capital, and so one of the lovely opportunity which came our way was a co-lending with the bank. So in which case, what you do is there's a RBI circular which came somewhere in late 2018, where they allowed a partnership lending, a joint lending between a bank which has a lot of money, obviously, and an NBFC, a joint lending program to a customer. Now that circular came in late 2018, but you will be surprised we are now about 3.5 years, 4 years from there, and there are only 2 successful execution of this agreement in India, right? And we were the first one to execute that in India, right? It's a lovely thing, from a lending point of view. My capital raising has been taken care of, right, in a larger way. And so 80% money come from a bank, and then I need to only put a 20% money, and then together we lend money to a customer, and that's all, right? It's just a lovely innovation, a lovely solution, but not getting implemented by a lot of people. And then that happens not only at the NBFC side, but also the bank side. Banks want to do it. So if you go and ask any bank in India today, they would all want to do a co-lending program. They believe that an NBFC can create a huge amount of value for a bank, but it really becomes a success. It is almost like a marriage between two person, and the marriage is not going successful, right? So it needs a lot of innovation of processes, innovation of technology, innovation of culture. How do you do a particular lending, etc., and all the different things, how the agreement has to be structured. There's so many things between to make that happen. So this is one example which I wanted to give. The second example is, in a very developed economy, there is a concept which is called a backup servicer and a master servicer. In US, to give an example to you, 50-55% of the total market rest with this concept of a backup servicer, master servicer. Now, this concept is as simple as that a bank is lending money to a customer, but bank is very busy in doing so many other things. The managing customer relationship, managing collection is not an easy thing for a bank to do, right? So what they do is they outsource this whole thing to a separate agency. Now, in India, there's a new concept, and we were the first one to start this concept in India. And even today, after 2 years, we are still the first company only to do it. There's no competition today in India. But it's a lovely concept where a lending organization is very busy in lending. So let them be busy in lending, and then the customer relationship and so-called collection is actually managed by professionals who have invested in tech, who has invested in the processes and system and efficiency of collection, and they can actually do a much better job in managing all those pieces, right? And we have been very successful in doing it. Over the period of time, we have signed about some 10,000 crore worth of portfolio, signed with almost about some 12, 13 different banks. So it is beautiful. It is lovely. And so I think, to my mind, some of these concepts which we talk about under agility umbrella is always done by a company who is dying for growth, who is dying for opportunities, right? And so there's a big need which comes in, and the whole organization then rallies to make it work.
But what are the disadvantages that hunger for growth can sometimes come with some riders? What are some of the disadvantages you think?
So I think one is very important is that we need to identify what is the core of a business, right? The risks actually multiplies once we go beyond our core. So let me give an example there. We are very good in lending based on properties, right? We are not very good in lending based on commercial vehicle, let's say, for instance, right? If we start venturing into areas which is beyond our comfort zone, beyond our core, the ability to make it a success is always lower, right? And there's a classic study on some of these concepts that one step beyond core and two step beyond core you will actually not succeed, but one step beyond core always is a 50%, 60% probability of success, right? So important thing is to do something, innovate something, everything around core, right? Are we able to do things which makes us better and better at what we are doing, rather than trying to get into something new stuff and then experiment that? So to me, the risks are always around beyond core.
Absolutely. It's a game of identifying the core competence for an enterprise. What is the enterprise really good at, and focus its efforts. And a very interesting example that you cited in the co-lending space, where the interplay between, say, the bank and the NBFC is not a marriage of convenience, but rather it's a marriage of innovation. All right, shifting focus, Hexaware has spoken about ensuring resilient business continuity for their customers. So Vikash, what tools and technologies have you deployed to make that possible?
The first and foremost is we invested in a new cloud-based ERP, right? Cloud is the way to go. That is something that we have ourselves, being in an IT industry, have been propagating it to our customer base or external clients. And the three themes on which the company works is automate everything, cloudify everything, and transform customer experiences. And that is something that what we have done internally too. So the first thing is invested in a cloud-based ERP. That's the way to go. Second, while we did it, we worked towards ensuring that we are making the IT infrastructure fungible. And what I mean by that is the business models are evolving, and they are evolving at a very fast pace. So we need to have an IT infrastructure which supports quick change from top to the bottom in a very short span of time. The third is invested in a good scenario planning tool. And one of the panelists, Rohit, actually commented on it. He said that if you think about it, you have to move away from being backward looking to forward looking, go away from have leading indicators, right, in terms of how your business is going to perform if you make certain decisions. So this is the time when scenario modeling is at its peak compared to what we have seen in the past. So we need tools that will use a combination of the data which is available internally versus the data which is not available, but use some AI and ML to come up with, visualize the impact of the decisions. And that's where the good scenario planning tool comes in handy. And there are a lot of products which are available in the market, and some of them are available even with the likes of Oracle. And the last but not the least, the area which is one of the most important, but gets the least amount of importance, particularly when a lot of my colleagues in the industry think about it, or the finance CFOs think about it, is the focus on customer experience. There has to be a maniacal focus in this area. And what that means is have a constant feedback mechanism, both from your internal customers, which could be the sales team, could be the pre-sales team, could be your HR business partners, the employees, and also from your external clients when you deal with them in terms of or the vendors, when you make a payment to them, or when you have received when you raise invoices on them, to understand how their experience is when dealing with the company. Now, if you take the internal client base, which is basically the employees, if you have an IT system which is easy to use, which is very employee friendly, that in a way goes a long way in terms of ensuring the engagement and the retention rate for employees. I mean, you just cannot downplay it. People don't understand it, but particularly when you're working on a remote environment or a hybrid environment, if that experience goes for a toss and people realize that, hey, I have to do an expense claim that's going to take me 2 hours versus 2 minutes, you can understand the kind of experience it creates, right? And it all adds up. So one area which gets the least amount of attention, but in my view deserves the maximum amount of attention, that when you're deciding your tool, just focus on, is it going to drive the right amount of customer experience? People just don't have patience and with everything which is available. So, and they have a choice to make, right? I mean, we are into a supplier's market. Everyone has a choice to make, and they'll make the choice. So ensure that you are setting yourselves up in a fashion that people choose you rather than your competitors over you.
Absolutely. Some relevant points there. CX and UX, keep your eye out on that. Prashant, expanding on what Vikash has said, while ERP has several use cases and allows for better integration transparency and efficient processes. Can you throw some light on how Oracle Cloud ERP solutions help businesses to be more nimble and innovative, and what role can such a solution play in enabling innovation in an organization?
Yeah, so I think Vikas has covered some of these points very beautifully when he talked about user experience, when he talked about infrastructure fungibility. I'll build upon that. So see, if you look at today's businesses, right, they span multiple ecosystem partners, they are spread across multiple locations, and they are managed by multiple stakeholders. Now, what Oracle Cloud ERP does is it reduces the overall information latency which is there. It makes the business network much more responsive to recent events, and that leads to better and more effective decision making. So how this is achieved? By reducing the overall information capture latency. So from the time an event has happened, right, how quickly is it collected, transferred, stored, and processed? How quickly do we process this information, right? That is where Oracle Cloud ERP can play a role. It also reduces the overall analysis latency because now you have exception monitoring, you have interactive data visualization tools for a better root cause analysis. So like Rohit was also talking about the team spending more time on analysis, right? So that's one way that we are able to help organizations. Your overall speed of decision making gets a boost because of the predictive insights and powerful what if simulation capabilities which are there. So you don't have to start thinking about what do I have to do, right? The system already presents you with 4 or 5 possible options, and then your job is to pick the best one out of that. So these things then actually help to cut down on the overall time that it takes from when an event has happened to your organization being able to respond to it with the best possible action, right? And that makes you much more nimble than the competition. Of course, it is all done with a very seamless user experience, so the user doesn't have to struggle or grapple with the system, right? The system is there to help them out. The second part of your question was around innovation. So with Cloud ERP, and you would have heard a lot of our panelists speak about their adoption of Cloud ERP. So what is happening is Oracle is taking up all the IT operation and maintenance activities like your infrastructure monitoring, backups, patching, upgrades. And that helps your IT and business resources focus on innovation and business value, right? They have more time available to think of these things rather than just doing operational activities. You don't need a lengthy cycle of an ERP implementation followed by a BI project and then adopt emerging technologies like AI, ML, or IoT in a third project. So Oracle ERP Cloud also reduces the overall cost of failure when you're trying out these new innovations. Right, you can run statistical models for new product introduction. You can simulate the best case and worst case scenarios even before you have started the project. Our project portfolio management can help you analyze a bouquet of R&D projects and choose the ones with the highest probability of success. And on cloud, you can start small and scale up if the innovation looks to be succeeding. That gives you a lot of flexibility in terms of how do you handle innovation within your organization. So I hope that helps.
Well, space for experimentation is just one of the many possibilities which are enabled, but we have focused a lot on the opportunities and advances. Let's also look at the bottlenecks. Yashpal, I'll bring you in for this. While executing multi-locational projects, what are some of the bottlenecks that were faced by traditional businesses, and has it changed now? While the pandemic did, of course, impact many manufacturing and distribution firms, do you now see a permanent change in the mindset when it comes to the implementation of technology?
Definitely, Gautam, I do agree. What happens was that earlier implementation of a technology was something at the wish of the management. I mean, we can go on an experimental basis, we can go on a certain points of time, on certain locations, but not exactly a need or a necessity. But with this pandemic has taught us a lesson that it's not something that we can choose at a later date or we can decide whether to go or not. It's inevitable now. It's indispensable. One has to adopt the technology. If you ask from me, like we have a multi-location operations. So earlier what was happening was on a manual concept when we were executing the projects at a different location. All the projects, they were going in a silo manner. Sitting at the corporate office, it was really a difficult task for us to manage the projects. Every project, they may be a similar in the nature, they may be a similar in the activities, product-wise different, but they were going with a different cost concept, different implementation schedule. Because it was not possible for us to manually control them. I mean, we were also having a limitation, and largely the analysis of data was a historical data. Historical data we were analyzing instead of going at the inception of the project. But with this pandemic, even before the pandemic, we started integrating our activities through the cloud ERPs. And I mean, we adopted Oracle Fusion well in advance. Thing was that the pace of implementation across all our locations. So we started with the finance module. We went with the this projects module, then procurement, sales and distribution, marketing, and gradually we implemented all the modules. So the advantage was that by sitting at the corporate office, at present I'm in a position to know out of my 42 location, which location is working at what cost element. What is the cost element of that location? In even a particular location, I'm having, like in Haryana, Gurgaon, I have 12 manufacturing locations. They 12 are working in a different environment. Although natural resources were same, activities were common, but now they have been pooled up. So this is how you see the bottlenecks that will coming with the plants or the projects running in silo. They have been pooled up now. So more of the time that was earlier used to go and consolidating, working out how the things has happened, that has already been removed. At the inception of the transition, we are aware, we have set up the targets. If they go beyond the target, the system automatically stops them. So now my time is not to go for a post-mortem of what has been done. What I really need to do, that has been put on the project, that this is the target they are required to achieve. If they go within that, it seems that they have achieved. If they go beyond that, then it is something that they need to discuss before spending anything. So I think this technological change is now a permanent thing. The mindset has entirely changed. Had the technology not been in place, I think the operation would have been discontinued. Because we have been largely able to mitigate the efforts, except the physical working of the plants. As soon as the plants started, I think it was a 40 days or something on lockdown during first wave. Second wave, we were working on a regional basis. Nothing has impacted us. As and when the customer was requiring, we were ready with all the information, with all the dispatch schedules, things were there. So I believe this is something which is permanent now. And it's not only, boosting our time, it's saving us time also. We are using our time in other activities, in business growth, how to grow the business. In fact, if you ask me, I'm involved in central procurement also. I'm involved in this IT integration, as well as now in the business development along with my core management team. So this is how I'm spending a time, rather than on just fulfilling the compliance part, just maintaining the figures, reporting historical MIS to the management. No, I'm just going on a value addition part, that this is how we can implement. In many of the cases, we have taken the projects in which earlier we were refusing because we were not having a clarity of the cost concept, how it was flowing. But now we have a cost concept that this plant can have I just give the example, a wage cost of 18 rupees per unit. Another is having 27 rupees. Why there is a gap? So that throws us a question that where we are lagging. Is 18 is efficient, or the 27 is inefficient, or there are some regional differences? So that it has given us a new platform for us to perform. So I would say it's a good, a good paradigm shift. There's a wonderful paradigm shift that has taken place, and this will continue with more advancement. So there's no chances to go back. It's a forward looking. It's just going and making a lot of changes and development and upgradation.
Well, the frontiers of the enterprise have shifted way beyond forward, and it's a positive progression, as you say it, right? Because as you remove the silos and compartment, it enables more transparency within the organization, which in turn helps you become more efficient. That leaves the bandwidth for leaders free to do more value-added work for the enterprise. And at the end of the day, it serves everyone in the ecosystem. Narayan, anything to add? How would you rate the adoption of such technologies in the finance space? What do you think stops traditional players in the industry from adopting these tools? Because we've heard about the interplay, you mentioned about the co-lending space, innovation, but broadly, if you see this industry, there is still a gap between the traditional players and these fast and newer and more nimble players. What do you think is the reason?
So from an adoption of Oracle perspective, I want to add a couple of points here. So one, I think a lot of our panel members spoke a lot of things about efficiencies, etc., etc. I will talk about something different. That so we are expanding very rapidly, right? So we are opening branches left, right, and center, and today we are present in about some 90 cities all around India, about with 130 branches, right? So the question in our mind and from a finance point of view as a CFO is whether each of the branch is going to deliver me a threshold ROE of 15-16%. So as an organization, then we are able to deliver a ROE of 15-16%, right? So that's one important point. And if I'm not able to make that ROE of 15-16% in every branch at every unit location, then at an aggregate level, obviously I'm going to be behind, right? So how does Oracle help me to monitor that and to deliver that? So we have created some model in which, say, at a 36th month of a branch operation, at a particular progression of growth with a particular yield and a certain element of OPEX, a branch will be able to deliver a, say, 15% threshold ROE for the company, right? Now, this is where Oracle helps us, right? It is a combination of, it's an architecture of Oracle which can pool different streams of flows of financial transaction and then put it together in a way which we can help us to monitor whether a branch is actually progressing in the direction which we actually would like the branch to progress. And then, obviously a corrective action can happen in terms of discussions, in terms of finding opportunities of growth, or doing more marketing, micro marketing activities, or looking at different elements of improving yields, etc., right? So this is one place where Oracle actually helps us to build this strategic piece together. The second piece is about risk. We talk about VUCA, we talked about volatility, but in some places, and let me give some example of our business, we do loan against gold, right? Gold is a very volatile commodity, right? And how do we then do a daily M2M on a gold so that I know at any point of time that I am properly covered from the security perspective on the loan I've given to a customer, right? And I have almost about some 60,000 customers on gold, and monitoring them can only be done with a fair amount of IT abilities, right? And this is where again a good software helps us to monitor and figure out where the risks lies, where we are now falling down on LTVs, and where we need to take a corrective action with a customer is concerned, right? So the third thing is the fraud. Any business which is very spread across India with a lot of geographical presence has a lot of operational risks. And one thing which we look at the technology to help us is to identify any transactions or any event which is outside the radar, and then really figure out whether there's an element of fraud happening in that location or a transaction or whatever we say. And this is another place where a good software like Oracle helps us to really figure out. So I think these are the three comments I wanted to mention.
All right, Prashant, we've got a ringing endorsement for Oracle from Narayan. Anything that you would like to add around this point on, a message to, say, traditional players in the industry for adopting tools? Anything you'd like to add to what Narayan said?
I think what we are seeing is a very big transformational wave that is happening in the market. People are getting out of or breaking the shackles of traditional ERP systems, which were very complex in terms of deployment, which were very complex in terms of upgrades, to a much more agile and nimbler kind of a solution, which is helping them or helping them drive that next level of growth. So I think I'll just stop at that. Or as Vikas said, right, at a fast and furious pace. So.
Well, considering that pace of change which is happening, I think now it's more a default option rather than an optional aspect of things. But considering, ERP touches each and every aspect of a company's operations, that could sometimes stop CFOs from attempting to modernize it. And Vikash, let me get you in at this point in time. Change looks attractive, but, opening up the hood and changing things, it is a task. What's your advice to your clients and CFOs embarking on, say, digital transformation initiatives, especially in an increasingly capital constrained environment?
Capital is one of the factors, but at the end of the day, my conversations is, hey, this is going to be a decision which is going to decide the fate of the company. The reason being, if you don't have access to real-time data, if you don't have a superior user experience, if you don't understand on a proactive basis the implications of the decisions which are being taken, you are going to be out of the market very soon. So it's no more a choice which is given. Now, in terms of how to think about it, why is there a resistance? There is a resistance because people think, what if things go wrong? This is going to cost us too much. My P&L cannot afford it. I can give certain my learnings in the process as we went through it. So first and foremost is, while there are going to be on-prem and cloud-based products which are going to be available, go for cloud-based products. Why go for cloud-based products? Because that's the way to go. And all the additional dollars from a research and development perspective that the product companies are investing in, it's on the cloud-based products. It's no more on the on-prem products. So first, invest in technologies which are future and where there are R&D investments coming in from the product companies. The second is, while you are deciding, while it might seem like that it's a cloud ERP, there are various submodules. So invest in identifying what your organizational requirements are, and based on that, build a bill of material. Do not invest on what's great to showcase, but has limited utility for your organization. That will help ensure that you pay for what you need. Third, if you want to make this journey less painful and you want to have less anxious moments, take help of external experts. And it might cost money, but it is worth the investment from a long term perspective. Fourth is, which is no customization. These products are developed by the companies taking inputs from thousands of organizations. So believe that what is being provided and how the cloud product works is the best. So don't try to do customizations according to your organizational needs, because in that case, you are going to invest a lot of dollars and at the same point of time, make it difficult in terms of the performance of the product itself. So those are the few ones which I would always advise. And if you follow these principles, you're going to ensure that it is not a costly affair, is very, very OPEX centric, does not require a lot of capital investments. And at the third point of time is you can continue to add the functionalities as you progress.
All right, more working capital, music to the ears of any CFOs out there. At this point, let me bring in Rohit. Rohit, Care India focuses on tackling poverty and ending social injustice. Now, with better, more transparent processes in place, do you see better solutions also coming in? What are the usual impediments that a not-for-profit faces when it comes to, say, fund gathering, channeling, and distribution? And how can technology or ERP solutions help in this specifically?
Well, in my humble opinion, I believe not-for-profit term is a bit of a misnomer. I think we are in fact for-purpose organizations with a laser-sharp focus on maximizing community positive impact. And also, people believe that here role of a CFO in such organizations could be less intense. But believe you me, the CFOs here have a unique challenge of ensuring financial well-being while simultaneously making sure that the organization is advancing its mission. So that makes the task of the CFO even more critical. And of course, the donors or the funders who are our lifeline, they place their trust on us. So it's very, very important that we are able to give all the data transparently. So transparency becomes a non-negotiable best practice for us at Care India. When one can quickly and accurately know and show what funders, donors want to see, it instills a sense of confidence that their discretionary investments are well managed. And of course, as the donors and funders put in their money across different projects in different geographies, something like an ERP solution, which we are using, helps us to present the information from a variety of dimensions, in terms of geography, project, nature of project, the time frame, the funding source. So we are able to maintain project-wise details for each of our funded project, which really helps enhance the credibility of the organization. And all these are also subject to donor audits, besides the statutory ones. So when they come and see the system being operated, the ERP being there, it really gives added confidence in the entire ecosystem of the organization. And that really gives us an edge over other agencies which are competing for the same pot of funds. So here, I would say the CFO's key role is to steward the resources in such a way that we ensure that it provides the maximum impact to our communities, which really gives me also a daily high with huge fulfillment and satisfaction at the end of the day.
All right. Anything you'd like to add in terms of how, say, ERPs can be positioned better for your space to add more value? Anything that you would like to suggest, Rohit?
Yeah, absolutely. As I think Vikas was also alluding, sometimes we get into the discussion of cost element, but I think the benefits far outweigh because we companies are considered as going concern. So it's not that we are ready to wrap up. We are here for a long haul. So accordingly, it's very, very important that we adopt the right technology and ensure that we are moving in sync with the changing times because the requirements are changing. So accordingly, the need to manage the entire ecosystem is also rapidly evolving and changing.
All right. As we look forward to concluding the discussion, let's get in the final word from Prashant. Prashant, can you discuss a couple of use cases from different industries of Oracle solutions helping businesses become more agile? You earlier mentioned about sketches. Give us some more examples.
So I think there are numerous examples of customers across industries becoming much more agile with the help of Oracle solutions. Let's start with logistics. So you have FedEx. FedEx wanted to build an innovation in their operating model. Now they chose Oracle Cloud ERP, EPM, and supply chain and analytics to create a unified platform that will support both inorganic and acquired growth. Now, in their digital operations, FedEx has significantly cut down on the manual effort and increased the speed of deployment. And they now have a 2x faster speed to market thanks to their digital transformation. So in past, what used to happen was the company would send teams to a country deploying a major new system. They'll stay there for weeks to set it up, train the employees. Now with Cloud ERP, FedEx completely virtualized its model for deploying software and training people on these new systems. And this enabled the team to set up 9 new local instances of Cloud ERP during the COVID-19 crisis without any interruption to their timelines. So that's the power of cloud and power of being virtual when it comes to ERP solution. If you look at a very traditional industry like manufacturing, and Yashpal talked about some of the benefits that they have derived, but I think in general, Oracle Cloud ERP helps manufacturers get closer to their vision of Industry 4.0 with smart manufacturing. IoT and blockchain are capabilities which are embedded into the product. And since it is built keeping in mind the evolving trends, right, the supply chain heads and production supervisors can remotely monitor the manufacturing activities on a real-time basis, while CFOs can get an accurate view of their inventory valuation and production costing. If we take healthcare as an example, healthcare requirements are very different, right? Typically, you'll find there is an HIS or a hospital information system which is running, which is taking care of your front office operations. And at the back end, you have an ERP. And these two are so tightly integrated, and that places a demand of it being a very open system, right? So that it can consume data from HISs and and send data back to them. Also help with analytics around patient care, profitability, unit-wise profitability, procedure-wise profitability, and so on. Another industry that is very well known for its agility is e-commerce and startups like Dropbox, Flipkart, Swiggy, Policy Bazaar, Ola Cabs, and so on, right? These organizations, they want to work on a very asset-light model, but also demand exponential scalability as they grow. Now, the pace of change with them is very rapid. Their business environment is changing very fast. Their functionality is changing very fast. Even their apps, if you see on your phone, they keep getting updated almost every other day, right? So Oracle Cloud ERP helps them be agile by providing them out-of-box best practice business processes right from day one without having to wait for their process and control to mature over a long period of time. Just like it happens in case of an established organization. They're also keen to take up new capabilities, and that is where our quarterly updates help them benefit from the latest developments so that they can compete with established players in the industry at a very rapid pace. They don't have to wait for a costly upgrade to happen 3 or 5 years from now in order to uptake the new capabilities, right? We ship them out as soon as they are ready, and customers are able to adopt them very fast. And I think one point that Rohit and other panelists were also talking about, right? We are moving towards a world where standard best practices are going to become the norm, right? Organizations are trying to declutter their IT landscape, declutter their business processes. They're questioning that, okay, what is the value my own custom process brings to the table? What is it so unique about that custom process that I cannot adopt a standard thing? Right? And in the long term, it helps them because it makes them much more agile. They are using a standard solution when it is very easy to make changes. If you're using a heavily customized solution, for you, it becomes very difficult because you have to do regression testing. You have to make sure that any change that you're making does not disturb the apple cart. So these are some ways in which probably I can go on with multiple industry examples. If you look at telecom, if you look at BFSI, everywhere I think there is change, and we are proud to play a role in that change. But these are some of the examples that I can think of.
Absolutely. And this looks to be just the start. More stories of innovation and growth are coming, enabled, of course, by technology. And as we heard, Oracle has been helping CFOs leverage the advantage of agility with technological solutions. Now, the COVID-19 pandemic has only highlighted the importance of being an agile organization. And we learned from our panelists today that the CFO is now a chief future officer who enables growth opportunities for the enterprise with technology bringing down silos and enabling more transparency within the system for the leadership to harness actionable insights from data and optimize resources and have more bandwidth to grow the business. And in that journey, you come up with interesting partnerships, as Narayan had mentioned, and lots of possibilities from adversity also coming up. And all that is just the tip of the iceberg. As has been the case for the last 4 decades, though, Oracle will continue to be the leader in data management and providing technological solutions to businesses. Its cloud ERP has played an important role in helping companies navigate the disruption of the pandemic and continues to do so. And on that note, I'd like to conclude this panel and thank all the panelists for being part of this discussion. And of course, thank you to our viewers for tuning in. This is Gautam Srinivasan signing off.